Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday's action was very dramatic as we saw early in the session the market trade up into the resistance numbers that I talked about that could be rejected between 33.18 and 33.24. The markets did get rejected from there, and we started to see some massive selling unfold. The entire analysis that I put out last night was predicated on key number holding, which was 32.56. It was interesting that I was on a 3-hour live stream yesterday. We had thousands of people watching real time and over 9,000 watching since the broadcast, but we were able to watch that 32.56 number get penetrated and watch the follow through after that occurred. We saw a lot of things yesterday. The machines were out big time pushing this market around, but there's something that hasn't changed, which I'll go through in the technical section. The 21 period moving average is just below where we're trading right now, will supply a substantial amount of support. Market's not likely to collapse straight down from here. There is going to be some support that will show up, and in fact we could see a rebound today depending on how we trade in the first few hours of the session. As we look to Thursday, as always, we have the unemployment claims coming out expected to show 850,000 increase, and the continuing claims is the big number. Anything under 12,200,000 will be bullish, but my expectation is that it's going to remain fairly solid because I think the economy is starting to see some weakness come in. What we're likely to see from this pattern, some more volatility down here. Don't be surprised if there's a flip in this market, and as I said, I'll cover the exact support levels and numbers to watch for any type of reversal. The thing that led its way again were the FANG stocks, and especially Apple, that was down over 5.5%. This was the main driver. There's just a lot of weakness out there in the tech sector, and we're continuing to see these markets just get hammered, and the machines, the emotion, everything was on full yesterday. As we go into Thursday, this will be a pivotal day. As I mentioned, some of the structure that I'll discuss in the video tonight will help you to understand what's likely to happen in the next couple of days. I don't see a complete collapse from these levels right here. We saw a pretty decent blowout, including our short-term database, which has dropped to 9% bullish, was one of the lowest levels I've seen. I'll go through all those details. Let's go ahead and take a look at the database and the technicals, see how this thing's setting up for Thursday's session. As we begin the review of the WaveTech database, as I mentioned in the opening comments, we saw once again nearly 1,000 new sell signals and only 80 new buy signals. So we had negative ratios even at the level we were at 11%. So the database has now moved down to a bullish 9.7%. This is one of the lowest values I've seen on this database, and I watch this thing every day for the last 20 plus years, and I know this like the back of my hand. What this means is all of the short-term trends are non-existent. They're even, as I mentioned in last night's video, they're even sideways or just down right now. There's only 1,601 symbols in the database that are showing a positive direction at the moment. That's not very many when you're looking at 16,507 active symbols in our database. So this tells us that this market's going to remain in this downtrend. It's going to test some of the key support levels I'll review in the technical section here in a few minutes. But this is an incredible event. If you recall, you've been watching the channel on a regular basis. Going back about 6 weeks ago, I was looking for the short-term database to rotate, maybe drop down to around 22%, 28% bullish, and I was talking about it refreshing and that we'd see a consolidation and then it would end up to be very healthy. Well, this is not a healthy sign going to 9%. This is catastrophic. So what that tells us is it's going to take much longer to heal this pattern once it does find the bottom. So there's a lot of work to be done. As we get traction in the short-term database, it will lead us through how to navigate and when this market is going to be in a bottoming pattern. Right now, we're not there doesn't mean we can't bounce or rally from these levels. It just means we're not going to enter any type of sustainable trend at this time. As we review the S&P 500, this is the cash market, and I have the Fibonacci numbers. As I discussed last night, the key number for this pattern, there were two key numbers. The resistance was going to be between 18 and 24. We actually saw a high of 3323.35. Market flipped from there. Now we still have the 10-period moving average above this, still declining sharply. I'll go through some other metrics here in a minute. But this pattern that's setting up is significant, and the low so far on the cash market has been 32.29, and that's going to be the key level. There's a chance we're going to try to hold that level today, and that when I was discussing in the opening comments, the first 2 hours are going to be very important, and I'll cover that in the futures here in just a minute. But this overall pattern still represents that ABC, and as we look and go to as we look at the weekly chart, the 21-period moving average currently is at 31.95, so we're about 30 handles from there. Not a big deal. We had a 78 handle day yesterday. We could easily print that number and bounce from there. PPM, that's not on this page, but it's roughly at 0.62, telling us that there's only a 40% probability for it to break that 31.95 level. I mentioned this also in the last couple of videos. This average is rising about 20 handles per week, so we're looking at 32.05, 32.08 as we come into next week. So how we trade around this number here is going to be pretty significant. If we do blow it out, this is going to be a substantial support level. We'll call it 32.08 to 31.95 is going to be substantial support on the cash market. As I review the S&P futures, you'll notice that the PPM1 is turned up. It's still a negative 0.33, which suggests that the resistance will be at the 10-period moving average, 33.16. That number is declining at about 11 handles per day. So we're going to be back to 3,300 and then into 32 handle very quickly by Friday. So this is going to be major resistance up here. The key level for the first couple hours today will be that 32.10 level. You look at the market grid, S1 32.75. The overnight low so far is 32.10 even. Once it hit that level, it traded as high as 32.31, traded all the way back down to 13, and now is bounced back and trading around 18 as I'm doing this. Now, London opened about 15 minutes ago. This video is coming out late tonight. The interesting thing about this configuration is that PPM1 is not accelerating to the downside. Expect to see this S1 level hold, and we could see an S1 R2 level. Because the volatility has kicked up so high, we're likely to see a little broader range. And if we did get through 32.10, then we could see S2, R2 could be a huge range, almost 100 points. I had talked in great detail last night about this 5-3-5 pattern unfolding, but the key was that 32.56 number. I made a special effort last night to emphasize two things. One, that we had not had a confirmed bottom yet, and that 32.56 level had to hold for the next two sessions. Well, it did not hold. It got blown out. Those of you that were on a live stream saw that happen real time, and we traded down to this 32.10 level. This level is going to be a new pattern that's unfolding. It suggests that there's an 8-bar pattern instead of the original pattern that I was looking at. That 5-3-5 pattern still there. That ABC that I talked about last night is still there. That is still part of this pattern, and it's all based upon that 21-period moving average that's lying just below this market at this time. So that's going to be a substantial amount of support. The next market we'll look at is the NASDAQ. We did see some of that rotation start to come into play. I talked about this a couple of nights ago, is that we backfilled a little bit on Monday, and now we're seeing the spread start to move back to the upside again. So I expect that will be the case. Right now we've got the NASDAQ is down 0.33. It was down as much tonight on the overnight markets of 0.8. So it's trying to rebound from here. If we look at the market grid, the low was 10,714 and S1 was 10,743. So we printed just through S1. 10,914 is the R1. So we're going to trade back most likely toward R1. And my expectation is probably S1 will hold. If that holds in the first 3 hours today, then expect to see an R2 trade on the upside, somewhere between R1 and R2. You know, we've seen these markets like this before where we get this highly volatile scenario and then they just flip the next day. It feels like the end of the world's coming, and then there's a flip back to the upside. If we look at the weekly chart on the NASDAQ, you'll also notice we traded just below S1. The low so far for the week is 10,656. 10,709 is S1. So we traded through S1. We're trading 796 right now. We're just above it. So the high so far this week has been 11,222. We've been staying underneath the 10-week moving average. All of the patterns that we reviewed yesterday in the live stream, if you want to go back and watch that, we've marked all the timeline so you can see when I was talking about different stocks. You're going to hear a common thread as I go through each one of these markets, and all about the 21 period moving average that's underneath the market and the 10 period on the top as resistance. So I'm expecting to see a lot of these markets set up some sort of consolidation pattern before we're going to know whether we're going to see this ABC that I talked about last night unfold. That's still in play in spite of yesterday's decline, in spite of taking out 30 on the S&P, the 3256 level. This pattern is still intact. This is still part of that first A wave, and it's just trying to find that bottom. And maybe yesterday could have been a capitulation of a sort. We'll see how everything sets up in that first couple hours today. If we hold this S1 number and we're able to close higher in the session, then that will be a very positive sign for at least the beginnings of a possible upward ABC pattern to start. And it seems to be much better pronounced on the S&P than the NASDAQ in this particular scenario. The next market I'll cover is the US dollar. The surge in the dollar has went beyond the STX number on a weekly basis at 94.06 with a high so far this week of 94.49. If we finish above this RXT number, 94.06 on Friday, that could signal a couple weeks of sideways range. So we'll be watching that really close as we come into Friday where we're trading. At close above that level, there's two things that will happen if that occurs. One is you're going to see a backfilling on the dollar, but it also will set up a pretty good long trade on gold, which I'll cover next. But everything that is going on in the markets right now is being driven by the dollar. If we start to backfill over the next couple of days, or let's say in the next 3 to 5 sessions, we should see some sort of a retracement coming over that RTX number. Just going to the daily chart on the dollar, on tonight's session, we've seen 94.49, R1's 94.56, S1 is 94.22. So far S1 trying to print R1 right now. We're a little short of that. I don't think we're going to see an R2. There's quite a bit of resistance as we come into around 94.75 to 95.05. The final market that I will cover tonight is gold. We're seeing a continuation on the downside of gold. It is down $7.90, 1860. Low's been 1852 even. As we look at the grid, S1 1855, S2 is down at 1842. I talked about some key numbers on the gold last night, but this is all about the US dollar. These two markets are totally connected, and they're, like I said, there could be a nice rebound here if the dollar starts to backfill a little bit, especially it may not happen until early next week. A close on the US dollar above the RTX number, that's going to tell us maybe 1 to 2 weeks of lower prices in the dollar should set up a pretty good pattern. We're going to find this trade off of the weekly chart here, and once again, that common theme that I was talking about is that 21-week moving average. It's 1861. The low so far has been 1852, so we traded through that. We're actually trading below that number right now, but with the ppm at 0.30, there is a 60% probability that we'll finish on Friday above that 1861 level. Now, I'm not saying there's going to be a huge rally back toward the 1908 and as high as 1950. We're likely to get sandwiched. Matter of fact, all of these markets that we're covering, the 21 and 10, I mentioned this on the S&P, all these markets are set up very similar, and we're going to see markets trading between the 21 and the 10-week moving averages for probably next week and maybe beyond. We'll see what type of volatility we get. But this market, if we hold this number, 1861 on Friday, then we're going to see a move back toward the 1900 level. There's a couple of resistance points. Once we get the new grid on Sunday night, I'll be able to update that. But for now, we'll be watching this 1861 level and looking for some sort of bounce, but we're going to see that only if the dollar starts to weaken. This is the end of the video. Thank you so much for watching. Thanks for participating in the live stream yesterday. It was great fun. We covered a lot of stuff. It was really good. Thanks again. We'll talk to you tomorrow night.